Daily outlook for Friday, July 31st. Alright, last day of the month here, last day of the week also. We come from a very significant reaction in the market, yesterday being a classic buy. Right, and as I was talking about in yesterday's outlook, it was saying that obviously the market came from bearish order flow here, and was saying how the only reason why this would start rallying right back inside of the range is given the context of FOMC of earnings, right, would have been a gap higher or a quick sweep of the previous daily low, right, accompanied by a divergence to then trade higher. Okay, and that's exactly what ended up happening in the marketplace. The market was a gap lower, but essentially a gap higher, right? From the open, started trading higher. Divergence at the previous daily low, right? So at the FOMC lows. So also, we had here a new day opening gap that was left unfilled inside of the range. You can see the bodies here, right, of the daily candles inside of this level, very precise here. Okay, so I can now remove this level. For the moment, I will keep still this daily suspension block, and I will likely keep this level until the market were to trade back above this wick, right? I believe that if the market can trade above this wick, then shouldn't be anything stopping it to trade back towards all-time highs, or at least towards the low-hanging fruit being the quarterly open. The reason why I'm keeping this level is because there could still be the chance, right, that the market retraces inside of it, right, and eventually ends up trading higher from it. Or vice versa, right? If the market were to find a reaction here, this can become a drawn liquidity, right? To eventually see price trade higher, or, right, could always be a continuation lower. Okay, so in terms of a premium drawn liquidity for the day of Friday, look, if today will be a continuation here of this classic buy, which in my opinion, that's probably what it's likely to be. Okay, either some kind of consolidation day that will end up creating here a fair value gap, or if not, can be a continuation already from the open or near the open. I do believe that it is possible that price sees that. But again, in case it were to find right a reaction to start retracing or reversing, then I do believe that it should likely do it from 28,400 up to probably 28,600, I would say. If price starts displacing 50% of this wick here, then I do believe that the drawn liquidity will be the current weekly high, right? That's the idea. Trading above the current weekly high would be trading back inside here of this suspension block. So in case the market is very bullish, and you're able to identify an open low high close profile, and market is already trading past 50% of the wick or is already trading past the weekly high, then probably 50% here of the suspension block would be, in my opinion, the last premium drawn liquidity. In terms of a discount drawn liquidity, so if the market were to reject inside of this range, right, say maybe trades higher and then ends up trading lower, look, a worst case scenario in my opinion would be seeing the market trade back inside of the suspension block. But ideally, well, not ideally, but at least what I believe will happen is that the market shouldn't retrace too much here, given the context of the market overall, right? Which is what we know, that the market came from an expansion to a consolidation, right? So we're finding this rally here pretty suspicious. Right, it's not this rally, sorry, but this dump lower back inside of the range to be suspicious, right? As it is against the yearly profile, as it is against the logic that price should continue to trade higher when it comes from expansion to consolidation. Right, and now essentially we traded back here to, say 50% of the range. And the market has had here an important liquidity event, right, to send price back higher inside of the range. Obviously Citadel coming out and giving their opinion, while telling, right? Their anticipation of what the Fed will do to the public. Eventually Trump coming out and talking about the Iran war, right, and what he's going to do and what not, and the market had displaced lower from that, right, and at the open they showed their hands, right, that all this was all manipulation, right, and they were probably all setting up long positions, right, and at the open the market opens, starts immediately rallying, right, as a gap higher. So they showed their hands to us, and in terms of timing, right, the fact that this happens here at the closure of July, okay, and with the market not having any delivery above the quarterly open, I think that this can be very, very favorable for August to create an open low high close profile to trade back higher. It will be very important to see how price trades inside of this range here. If today will end up being an expansion day, then I do believe it will be extremely highly probable that August will be an open low high close, right? There could be potentially here a fair value gap left behind, or this could actually end up being a breakaway gap. Okay, if not, can also be an immediate rebalancement, right, to trade higher. Okay, so that's that for the daily chart. If this is the reversal, okay, if this is actually the low here of the quarter, then I think that these standard deviations are relevant, right? So from the previous daily high here, the FOMC high, down to the gap higher, you can see that drawn liquidity for this market, for this anticipated market maker buy model, would be low hanging fruit the quarterly open, and eventually we'd be looking for new all-time highs near the range of 32,000. Right, we can look at a 3-week look back chart. Again, as price has found here, as we looked on at the daily, has found a reaction from this new day opening gap that was left unfilled in the range. For the moment, I will take out that level. Here we still have the level of the daily suspension block, and you can see this big 4-hour fair value gap that was created right through it and right through the wick of FOMC. Okay, so again, pretty significant in my opinion. If the market is really bullish, it can leave this fair value gap open, okay, as a breakaway. This is something that we'll look at on the 3-day look back. You can see that, right, the low of day came from that unfilled volume imbalance, right, that unfilled new day opening gap, and the high of day comes right at 50% of the new week opening gap. Okay, so I do think that coming inside of the New York session should be very important to see how the market has traded around the new week opening gap and around this fair value gap here. Okay, if the market's really bullish, it could simply from the open continue trading higher, reclaiming the new week opening gap, right, and start trading towards premium levels, such as we have here an unfilled fair value gap inside of the range. And if it were to even trade past above that, then we'd be looking at the previous weekly high, right? And this unfilled fair value gap happens to be located right where the current weekly high is located. Okay, so this would be here a low hanging fruit drawn liquidity for an open low high close profile. This would be the high of the current weekly high, right? So the high of Monday, and then the 4-hour fair value gap that's residing above it. In case of an expansion higher, I'd say from the open, market starts rallying as a continuation, and you see that this looks like it has a lot of juice, then you could potentially be looking to target this is the weekly high from 2 weeks ago, right? And it had formed here from a premium breaker inside of the range. But overall, right, in case of an open low high close profile, I'm mostly looking around this range here, the range of that 4-hour fair value gap that was left unfilled. And in terms of discounted levels, well, we still have the daily suspension block. You can see that a large 4-hour fair value gap was created through this daily suspension block. So I do believe that this should be the drawn liquidity, the discount drawn liquidity for the day, in case the market were to, right, have an open high low close profile. Okay, we can analyze here the 3-day look back. Again, this is a level here that I'll be removing from my chart, that daily volume imbalance and new day opening gap. Again, on every single time frame, you can see that 50% of it was always respected. So for the moment, we'll be removing this level from my chart. We can analyze the phase of price delivery. Price comes from a swing to Z to a bearish seek and destroy. Right, and yesterday was a classic buy. Okay, so here we have what? We have consolidation, consolidation to expansion, right? And then we have expansion to expansion. So we have here a reversal happening inside of the market, right? Expansion to expansion. Right, and the previous daily high here is currently the, well, would essentially be opening near the range of the 3-day look back. So we're going to need to use higher time frame levels, right, starting from the 3-week look back to identify premium draw on liquidity. Now on the 1 hour chart, personally at the moment, since we're already trading above here the daily suspension block, price for a bit, you know, was consolidating around 50% of it. Right, it was overall being sensitive to the quadrants of it. But now that it has traded above it, and because the previous day here was a large range, I'll be inclined to simply use, for my discounted levels, the previous daily range. Alright, so we have the high here. Okay, price left a rejection block inside of the high. At 25%, you can see that there's a range here of a bullish order block. Since it has a large wick, I would probably prefer simply analyzing the wick of it. At the low, okay, we have, that would be here the new day opening gap. Right, the gap high, the gap down that was immediately sent back higher, okay, for divergence at the previous day's low and whatnot. Now at 50% of the range, right, you get a couple fair value gaps. Now, which one do you choose? Well, personally, I prefer using this level right here, right? You can see that from 75% up to 25%, we have the range of this large fair value gap. Happens to cut right through the FOMC wick. So personally, I think that just using this level here will be more beneficial instead of trying to, instead of having to identify here 2-3 fair value gaps on the hourly. Okay, so I think this covers it in terms of the discount arrays located inside of the range. Now in terms of premium arrays, well, there's obviously still the new week opening gap here. Maybe instead of the previous daily high here, I can simply identify this as a premium level. I can see that the previous daily high forms at 50% of the new week opening gap. Okay, and if the market were to trade past this level, well, we'd be looking at these highs here, right? The current weekly high. Overall, we have relative equal highs sitting below here a 4-hour fair value gap as we had identified. I believe that there's a small volume imbalance here. Yeah, there is. Okay, and then again, past that would be the range here of the premium breaker, right? So this is how I'm going to be approaching tomorrow's daily profile. This wick here remains important, right? This is a level that we had identified here on the 3-week look back, coming inside of the week. This is the same level here that can be found on the daily, right? And we know that the range is pretty high resistance around this wick, right? We have here a bearish order block, bearish fair value gap, and obviously the new week opening gap. Okay, so it will be very, very important to see if price is able to displace the new week opening gap. If it is, then we can look for a draw on liquidity. I would say around 29,000, give or take. If not, if the market will fail at these levels, then I'm interested in seeing how. Let's go back on a 1-hour chart. I'm interested in seeing if it's really bullish. Okay, can it hold simply the wick here of the order block without needing to come back inside of the 4-hour fair value gap? If not, if this level can hold, then personally I'll be anticipating probably some kind of New York reversal from this 4-hour fair value gap. I think that this is just too important of a fair value gap because of timing, because of the PD raise that it cut, right? That FOMC, that large FOMC wick that price left behind, is a bit too significant for me, right? This to me looks like well, it is a breaker here, right? This up close candle, the series of up close candle here is at the moment a bullish breaker, right? Market traded, it came from a double purge, right? Takes out the highs, takes out the lows, and then rallies through the range. Okay, so very important fair value gap here. Okay, quick recap. Yesterday delivered as a classic buy. Discount levels have held. The market has now reclaimed the daily suspension block. So because of these reasons, I do anticipate that the market should deliver towards premium, or at least should try to trade towards premium. Low-hanging fruit draw on liquidity. We're looking at 50% here of this daily wick. This was the rejection block created at the closure from 2 weeks ago. So low-hanging fruit 28,500. Past that, I'm looking at the current weekly high, which would be at around 28,800. And then past that, I'm looking at 50%, 75% here of this daily suspension block. 4-hour chart, about the same idea, right? If the market can reclaim the new week opening gap at these levels, then I do believe that the draw liquidity will be Monday's high, and then we'd be looking here at the range of a 4-hour fair value gap. And if price even trades past that, then you got here premium breaker inside of the range where you got the highs from 2 weeks ago. 3-day look back chart, we identified the phase of price of delivery. You saw that price came from a bearish swing to Z, eventually followed by a bearish seek and destroy. Okay, so we got consolidation, expansion, and yesterday as a classic buy, right? So expansion against expansion. Okay, so for this reason, again, I do anticipate a premium draw on liquidity. Again, if the market can reclaim the new week opening gap, I'll be looking personally for a new high of week to be made, looking to trade inside of this unfilled 4-hour fair value gap. If not, if price will end up rejecting from the new week opening gap, right, or somewhere near it, you know, this range, as we talked about, is still pretty high resistance. You got a fair value gap, an order block, you got a large wick. If that's the case, I'll be interested in seeing how price will react here at the order block located at 25% of the previous daily range. If the market were to trade past that, then personally I'll be anticipating for probably something like a New York reversal profile from this is a 4-hour fair value gap that cuts through the previous daily range. You can see also this is the monthly fair value gap here. Price has touched 25% of it, just missed here the bullish mitigation block being the previous yearly high. Right, and at the closure here of this candle is probably looking to create a rejection block here. Okay, so overall I do believe price is still very bullish, right? This was simply expansion to retracement. In my opinion, should keep on trading higher. But we'll have a better idea here of what the trend can look like going inside of August when I'm going to be doing the outlook for next week. All right, I think that covers it. Good luck and good trading.